Alrighty, check, radio check. For those of you who have not joined me yet this year, Happy New Year's. Here's to a prosperous and healthy 2024. Today's call will be really a market recap, sort of a rear view mirror look of, even though it says January 2024, remember, this is always looking back at the last month and the last year, and seeing as that's 2023. We're just really going to be sort of reviewing some of the things that I spoke about early in the year, and I'll sort of give a little bit of my thoughts on a go forward for this year, and then how the market ended up. So thanks for taking time out of your busy schedules and joining us, and I hope everybody's well. So without further ado, let's get started. So for the month of December, the markets did well in 1 month, and the only thing that really didn't perform was the commodities, your oils and precious metals, things of that nature, and that had been under pressure all year. But everything else, and you'll see that the small caps, which is the business sector, the Russell, took the lead for the month of December. And as we look at it and we pull back and we see how did the year fare, this is actually turned out to be a little bit bullish. And if you recall early in the year, if you can see we're in the lower left side, I was concerned with, there was a lot of the economies calls for recession. But the economies throughout the world seem to shrug off a lot of that. And the green is the S&P. I mean, this is why, sometimes, not sometimes, you can't time the market, right? And also, a lot of us, human nature is we tend to only be able to sort of look back. What I've found in my experience, people can only look back 24 months, and they say, well, why didn't I get 26% in my portfolio? And that's because you weren't 100% into the S&P. They're all things have a cost, right? So if you're going to be, but this is just sort of framework of the markets. And then as we go down the top three, right? So we have the green, we have the blue, which is the European, the MSCI, the EAFE, which is the European markets. That just tells you that between, basically Europe and the United States, we were doing well. And then you go down to the next one, which is gold, right there, finishing strong. And I believe that the small business sector is often overlooked, but to me, in my opinion, it is really the heartbeat of America. It's what's helped build this country and keeps this country moving. And we have to support these smaller companies to help them, the mom and pops and companies that are or not in the blue chip. So, it is good news, right? I like good news. And, I just wanted to share that and saying, hey, a lot of your 401ks, your statements, the returns, all have had upward ticks, right? So this is good, but long term, we're looking at averages. And so we're going to pull back a little bit and say, hey, how does the rest of the year look? But not yet. Right. I just want to say that we still continue to have a green line. We still think, I mean, I know you need to be invested. And, my opinion of 2024, I do have concerns. I will always have concerns, but I will not react to momentary glitches. So part of dealing with, advisors and professional money managers is being able to remove as much as possible emotions from what we're doing. We're trying to have strategies that put in place a reasonable rate of return so that we can capture some of the upside, right? While simultaneously balancing our portfolios to limit the downward, because the bottoms will fall out. So right now, the markets, a couple things I think could derail the economy on a go forward for 2024. This is an election year. That in and of itself, come, third quarter of this year, you could see a lot of swings in the marketplace. I think that's going to be less of a concern than the global geopolitical risk, and inflation has not been ironed out yet, right? So everybody is still sort of looking at the central banks, seeing what they're going to do. What's the Fed going to do? So as much as it seems like inflation, and I was just speaking to a new prospect from Minnesota this week, and and he had concerns because he's like, well, my I bonds and my CDs are starting to drift back lower. Do I have anything else? And the answer is yes. His strategies, I mean, he's older, he doesn't want to lose the money, and so I was able to offer him ideas that start to take into consideration a little bit longer time frame. So as we look out, we can't just look at just the next 12 months. We have to start to think about 24, 36 months. Where do we think interest rates will be then? And you're seeing a lot of volatility in the yields of the bond market, which we'll see next. So it has not been resolved. But right now, our encouragement is, if you're still working, continue to invest in your 401k. I just did a video on that. I'm going to strongly encourage you to continue to do that. Max it out if you can. Make sure you take advantage of any Roth components of your 401k at work. And if you have a Roth at home and you're still working, you can contribute to that, do so as well. So those are thoughts there. And then as we look at the bond market, again, yields are up for the month of December, which is good news, right? It's not knocking the cover off the ball, but the treasuries seem to be, and that's typically a flight to safety. So people that you look at it for year to date, for 1 month, you go, oh, treasury bonds. But when you looked at it for the year, look at it, it had dropped all the way down, into negative territory, and almost negative 15, almost negative 16%, and then it came back and was able to show a small profit. And a lot of my clients do not have a risk for those roller coaster rides. So you need to have balance in your portfolio, and obviously we want to have a 60-40 split, a 50-50 split. I was just doing with the training call with the Eagle team this week, software that does 5,000 Monte Carlo simulations and starts to look at, the probability of success if you make it out to age 100. Using Social Security as a tool to be able to make sure that the income that we're counting on in retirement, should I claim it at 62? Should I wait to 65? Full retirement age is 67. Should I delay till 70? And the answer is, it depends. It depends on your family. It depends on your genetics. It depends on a lot of factors. And you can't follow, what I call water cooler advice. So overall, again, I think it's good news for the year 2023. Yields are back. And so, and a diversified bond portfolio. But this year, we have to start to look at and say, is it sustainable? Right. So right now we've entered this green line, but it's narrow between red and green. And I think this volatility, we will start to see some chop here. And, so just be careful, right? So don't overweight in bonds. Be very careful running down and locking up. People want to lock up their money for, I think an 18-month CD is, right around 5% right now, and they've dropped down, and we can do better in 24 months. And that's why we start to think out, is like, should I lock in these higher interest rates for 3 years or 4 years? And the answer is, again, it depends. It depends on your circumstances, but there are strategies outside of traditional, Wall Street that we can do to start to plug in to allow us to be able to participate in the upside. So that's pretty much my presentation. And again, it's relatively quick and easy. I will say that the recession probability analytics tool, we've now crested above 60%. And again, these are just some indicators, they're like gauges on your dashboard of your vehicle while you're driving, telling you, hey, heads up, be aware, things to be thoughtful of. And like I said, you have, I mean, between what happened in Israel, right? You have still have Russia conflict. Now you have Iran flexing, right? We have Yemen. We have these terrorist groups that are popping off. We have global conflict. We have an invasion coming across our southern border, right? That nobody is has a plan or solution for. We're just giving free entry. Any number of things could just, I mean, I think we built or set the stage for a lot of kindling. And it's just going to take a match to set some things off. And everybody's going to be sitting around going, what happened? And I don't have an answer. I'm not a politician. I just know what I see, and I try not to listen to the news. I just try and trust my instinct. And my gut tells me that there's some warning signs. It's like I said, I'm a Navy vet. I use analogies like nautical terms, and I see storm clouds on the horizon. I can't speak to it, whether it's going to bypass us, whether we're going to take it full force. I don't know if it's going to be a hurricane. But I don't like the risks that we as a country have subjected ourselves to. And again, all politics aside, it's just my gut. And I think the markets tend to look at things and say, hey, right now everything's going along fine and nothing, no problem. What's the issue? We go to work and we look at our statements and everything's fine. But numbers like this, 62%, anything above 50, just starts to say, that old saying, things that make you go, and this is one of them. So, I'm just trying to give caution out there. I would not be taking an exorbitant amount of risk. So that's why when I talk about the S&P or trying to get some type of equity performance from a portfolio, and everybody will come and say, hey, why didn't my portfolio get 26%? Do you want the risk? And everybody will say yes initially. And you say, but understand with that risk, if you had 100 grand, you could lose $50,000 or $55,000 or $60,000 to achieve that 26%. We're going to be talking more about that stuff. We're going to be talking about standard deviation again. We're going to be talking about Sharpe ratio. Some of these things that I haven't touched on in a while, but these are things that are important in our decision-making process to make sure that as we're looking out into the future, what's going on. The last thing I want to talk about is our events. I mentioned this last week, so I think we have some tentative dates on our at least close or closing in March 9th, and I think the 16th are 2 Saturdays that we're going to be doing. Next week, so I have my call next week. I don't know. I think I might do a call in Sharpe ratio next week. And then after that, been invited into the studio by New Jersey 101.5 to be a panelist. And Caitlin, I believe, was going to put in to the link. I don't know if she did, but if not, just reach out and say, hey, I want to listen to that. And it will be A, on the radio, and B, I think it's live stream on Facebook. So all these things, we'll send out a link once we have it via email. Okay, so it's coming, but I'm honored that the state that I live in, a local authority here, sort of all things New Jersey, recognize me and values my opinion and my spirit and knows that my heart's in the right place. I'm just trying to give people a heads up and give them a little bit of an advantage of taking care of themselves and their families. So that'll be next Thursday, 7 o'clock. That'll be live. So if you can, join there. And then, as I mentioned, I'm going to be doing some Social Security income workshops so we can do a little bit deeper dive into, what things should you be thinking about before making some of these elections, because once a certain period of time goes by on Social Security, there's no do-over. So, and it's not always as easy as, oh, just wait till 70, you'll get more. Sometimes that's correct advice, but sometimes it's not. And so, how do we know? You talk to somebody like ourselves, a professional planning services that can give you guidance. So, folks, I want to thank all of you for, again, supporting us. We're always here. We try and be responsive, and look forward to speaking to you and seeing you soon. Have a great day.